If you're currently receiving Social Security, stop whatever you're doing for the next few minutes and stick with me. Because right now, in June 2026, there are three distinct financial shifts underway that touch your monthly deposit, your tax refund, and what you're paying for prescriptions. Most of the seniors who write to me have either never heard of all three, or they've heard bits and pieces without knowing the one specific step required to actually claim the full value. I'm not talking about vague future possibilities. I'm talking about actual dollars, either already sitting in your account or still waiting to be claimed because a form was never submitted, or a number was never double-checked. For more than 10 years, I've tracked retirement benefits, senior tax rules, and the financial regulations that shift every year and quietly affect millions of older Americans. Right now, in June 2026, these three changes together can mean thousands of dollars a year in permanent extra income for the right household. Before we go further, are you subscribed to this channel? If not, do it now and turn on notifications. Here's why that actually matters to you personally. Social Security, Medicare, and senior tax law change constantly, and when they do, no one mails you a personalized explanation of what it means or what you need to do. This channel breaks down every change in plain English as soon as it happens. Skip subscribing, and the next update that could put money back in your pocket goes by without you ever knowing. Hit subscribe, and let's get into today's three changes. Here's the roadmap. Change 1 is about the COLA increase that landed in January. Most seniors saw an actual deposit bump far smaller than the number in the headlines. And for one specific group paying a Medicare surcharge, there's a form that can permanently recover that gap within 60 to 90 days of filing. Change 2 is a tax deduction that applied to your 2025 return. If your preparer handled it right, you already benefited. If not, there's a refund sitting in the IRS system waiting on one amended form. Change 3 matters most specifically in June. It's about your prescription drug cap that resets every January, and mid-year is exactly when you need to check it. 3 changes, 3 actions to take. Change 1, the real COLA number. Let's start with your January deposit and a number most seniors never actually examined closely. Do this right now if you can. Pull up your January 2026 Social Security deposit, then find your December 2025 deposit, and put the two side by side. What's the gap? For most people, it wasn't what they expected, and here's exactly why. The 2026 COLA was announced at 2.8% for the average recipient getting $2,015 a month, which works out to roughly a $56 monthly increase. That's the number everyone heard about. That's the number seniors expected to see land in January. But Medicare Part B premiums rose at the same time, from $185 a month in 2025 to $202.90 in 2026, an increase of $17.90. And because Part B premiums come straight out of your Social Security check before it ever hits your bank account, that $17.90 was deducted from your COLA before you saw a cent of it. So the average recipient's real net increase was closer to $38.10 a month, not $56. Part B premiums rose almost 3.5 times faster than the COLA itself, making this the second largest Part B premium jump in the program's history. The headline said 2.8%. What most seniors actually felt in their January check was closer to 1.9% after Medicare took its share. Write both numbers down. January 2026 minus December 2025. That gap is your real net COLA. Hold on to it because it connects directly to what's coming next. Here's something rarely explained when this premium hike was announced, and it might apply to you directly. Social Security law includes something called the Hold Harmless provision. If you're enrolled in both Social Security and Medicare, and your Part B premium is automatically withheld from your check, this rule says your premium increase in any year can never be larger than your actual dollar COLA increase. In plain terms, Medicare can't push your net Social Security payment below what you got the month before. For roughly 1 million seniors whose personal COLA amount was smaller than that $17.90 premium jump, this protection kicked in automatically. Their premium increase was capped at exactly their COLA amount, so their check couldn't go negative. If your benefit is on the lower end and your 2.8% COLA came out to less than $17.90 in raw dollars, you might have been shielded by this rule. Check by comparing January to December. If the increase was smaller than expected but your check didn't drop, hold harmless was likely at work. If anything looks off, call the SSA directly at 1-800-77-21213 and ask specifically whether hold harmless was applied to your account for 2026. Now, for the group where this matters most, if you're currently paying an IRMAA surcharge on your Part B premium, your real COLA gain was even thinner. And there's a form that can fix that within 60 to 90 days. For anyone unfamiliar, IRMAA stands for Income-Related Monthly Adjustment Amount, an extra charge Medicare tacks onto your standard Part B premium if your income from 2 years earlier crossed certain limits. In 2026, the first IRMAA tier kicks in above $106,000 in modified adjusted gross income for a single filer. That tier adds $81.10 a month on top of the standard $202.90. The next tier adds $204.40 a month, and it climbs steeply from there. Here's the situation to think through carefully. Your 2026 IRMAA charge is based on your 2024 tax return. If your 2024 income was higher than it is now, because you were still working, had a one-time windfall, sold property, or took a large retirement account distribution, you're paying a surcharge today in June 2026, based on financial circumstances that may no longer apply. That's real money leaving your deposit every month for income you're not earning anymore. Form SSA 44, free at ssa.gov, lets you report a qualifying life-changing event and request an immediate recalculation of your premium based on your current income instead of your 2024 figure. Retirement qualifies. Reduced work hours qualify. Loss of pension income qualifies. Death of a spouse qualifies. If any of these happened in 2024 or 2025, and your income dropped substantially, filing the SSA 44 this week can eliminate a surcharge currently costing you anywhere from $81 to over $400 a month. Every month you don't file is a month of overpayment you can't get back. Bring documentation when you file. For retirement, that's a final pay stub, a separation letter from your employer, or your pension statement. Submit it in person at your local Social Security office or by certified mail. The recalculation typically takes effect within 60 to 90 days. One more thing that trips people up every year: some assume that once their 2025 tax return shows lower income, Medicare automatically adjusts their 2026 premium. It doesn't work that way. The 2-year lookback means your 2025 return affects your 2027 premium, not 2026. The SSA 44 is the only mechanism that forces a recalculation ahead of that normal 2-year cycle. If you're paying IRMAA and your income has dropped since 2024, filing the SSA 44 isn't optional. It's the form that puts your money back. Do it this week. Change to the senior tax deduction. This is the one I hear about most from seniors who filed their 2025 return and have no idea whether they actually got it. If your preparer missed it, there's a refund with your name on it sitting in the system right now. But first, the fact that you're still watching says something. Most people click, watch 2 minutes, and move on. You stayed. That tells me you take your finances seriously, and that the difference between money in your pocket and money left on the table is exactly the kind of information you're here for. If you haven't subscribed yet, do it now and turn on the bell. Because what's coming in, changes 2 and 3 are exactly the kind of updates most seniors learn about 6 months too late. You're early. Stay subscribed so you stay that way. The One Big Beautiful Bill Act created a new federal deduction of $6,000 for anyone 65 or older. For married couples where both spouses are 65 plus, that's a combined $12,000. It applies to your 2025 return, the one most seniors filed this past spring. Here's what sets this deduction apart. It stacks on top of your regular standard deduction and on top of the existing additional senior deduction already baked into the tax code. You don't choose between them. You get all of it. You don't need to itemize either. It applies whether you take the standard deduction or itemize, and it reduces your taxable income from the top down. It phases out starting at $75,000 in modified adjusted gross income for single filers and $150,000 for married couples. Below those levels, you get the full amount. Near those thresholds, you may still get a partial amount depending on exactly where you land. Now here's where most explanations of this deduction fall short. The basic math. A single senior in the 22% federal bracket saving $6,000 of taxable income saves $1,320 in direct tax. A married couple in the same bracket saves $2,640 on the $12,000 deduction. Those numbers are real and meaningful, but for a lot of seniors, the actual benefit runs considerably higher because of how it interacts with the provisional income formula that determines how much of your Social Security is taxable. Here's a concrete example. Say you're single, your pension pays $18,000 a year, and your Social Security is also $18,000 a year. Your provisional income, AGI plus tax-exempt interest plus half your Social Security, comes to $27,000. That's above the $25,000 single filer threshold, meaning 50% of your Social Security becomes taxable. You're paying federal tax on $9,000 of it. Now apply the $6,000 senior deduction. Your AGI drops by $6,000, bringing provisional income down to $21,000, below the $25,000 threshold. Your Social Security is now entirely tax-free. The direct saving from the $6,000 deduction at 22% is $1,320. But wiping out tax on that $9,000 of previously taxable Social Security saves another $1,980. Total benefit, $3,300, more than double the face value number. This multiplier effect hits anyone near those provisional income lines. $25,000 for single filers, $32,000 for married couples. The closer you were to that threshold before the deduction, the bigger the combined payoff. And if your preparer ran a standard calculation without accounting for this interaction, they may have applied the deduction correctly on paper, without ever explaining how much it was really saving you. So here's what to do today. Not this weekend, today. Pull up your 2025 federal return. It's on file with your preparer in your tax software, or you can request a free transcript at irs.gov using the Get Transcript tool. Look for the senior deduction. It should show as a $6,000 line item if you're single and 65 plus, or $12,000 if you and your spouse both are, reducing your adjusted gross income. If it's there, you got the benefit. If it's not, you have a refund waiting. Call your preparer this week and ask specifically, was the enhanced senior deduction of $6,000 from the One Big Beautiful Bill applied to my 2025 return? Not a general deduction question, that exact question. Anyone current on 2025 tax law will answer immediately. If they hesitate, ask them to pull up the return and point to the line. If it was missed, the fix is Form 1040-X, an amended return. The window to amend a 2025 return stays open until April 2029, so you have time. But every month you wait is a month that refund sits in the IRS system instead of your bank account, not earning you anything. One more action tied to this. If you're withholding federal tax from your Social Security check via Form W-4V, recalculate your actual 2026 tax liability after factoring in the $6,000 deduction. For many seniors, this deduction drops their liability significantly, sometimes close to zero. If your liability dropped but your withholding didn't change, you're prepaying tax every month that only comes back as a refund a year later. Adjust your W-4V now and keep that money in your monthly check where it belongs. Change 3. The prescription drug cap. This is the one that matters most specifically right now in June. Before I explain it, think of someone in your life, a parent, sibling, neighbor, friend, who's on Medicare and takes regular prescriptions. Keep them in mind because what I'm about to explain has been active since January, and a lot of seniors aren't using it correctly. One conversation from you could save them hundreds, even thousands of dollars before December 31st. Every Medicare Part D plan and every Medicare Advantage plan with drug coverage now has a hard annual cap on out-of-pocket drug spending. In 2026, that cap is $2,100. Once you've spent $2,100 out of pocket on covered Part D drugs in a calendar year, your cost for every covered medication drops to zero for the rest of the year. Not discounted, zero. Your plan covers 100% of covered drug costs through December 31st. Think about what that number represents. Before this cap existed, seniors managing cancer, diabetes, rheumatoid arthritis, MS, or heart conditions could spend $8,000 or more a year out of pocket. In 2024, you needed to spend $8,000 to reach catastrophic coverage. In 2025, that dropped to $2,000. In 2026, it's $2,100. What used to require $8,000 of your own money now kicks in at $2,100. One of the biggest improvements to the program in decades. You don't need to sign up separately. Your plan tracks your spending automatically. Cross $2,100 and your cost drops to zero at the pharmacy counter without any action on your part. Here's why I'm bringing this up now, in June, rather than back in January when it started. The cap resets to zero every January 1st, and everyone starts reaccumulating toward that $2,100 limit from scratch. Seniors on regular higher-cost medications, especially chronic conditions or specialty drugs, often hit that threshold by April, May, or June. Right now, mid-year is exactly when a lot of people have either already crossed it or are about to. And here's the problem I hear constantly. Seniors who've already crossed the cap are still getting charged at the pharmacy because they never checked. So to this today, not this weekend. Call your Part D plan using the member services number on the back of your insurance card and ask for your year-to-date out-of-pocket drug spending that counts toward the $2,100 cap. Most plans also show this in their online portal under your benefit summary or prescription history. If you've already hit $2,100, every covered prescription from now through December 31st should cost you nothing. If the pharmacy still charges you after you've crossed it, call your plan the same day. Don't pay and sort it out later. Call from the pharmacy counter if you can. Your plan is required to fix this, and any overpayment has to be refunded. If you haven't hit the cap yet, but you're close, knowing your current number lets you budget the rest of the year accurately. Here's a bonus most seniors haven't heard about, and it directly affects how fast you reach the cap. As part of Medicare's drug price negotiations, the federal government negotiated lower prices on 10 specific high-cost medications, effective in 2026. These lower prices apply both at the pharmacy counter and toward your $2,100 cap. The 10 drugs are Eliquia, blood clots, atrial fibrillation, Jardiance, diabetes, heart failure, Xarelto, blood clot prevention, Farxiga, heart failure, kidney disease, Entresto, heart failure, Enbrel, rheumatoid arthritis, psoriasis, Imbruvica, certain blood cancers, Januvia, type 2, diabetes, Stelara, Crohn's disease, psoriasis, and the Fiasp and Novolog insulin formulations. If you take any of these, your 2026 out-of-pocket cost may be lower than 2025's, which means you'll hit the $2,100 cap at a different point in the year than you would have otherwise. This benefit requires no action from you. It's already active. But knowing about it helps you project when you'll cross the cap and what your remaining 2026 drug costs look like. One important distinction, the $2,100 cap applies specifically to Part D covered drugs. Medications administered in a doctor's office, infusion center, or clinical setting, certain cancer treatments and injectable biologics, are typically billed under Medicare Part B, not Part D, and follow separate cost-sharing rules that don't count toward this cap. If you receive infusions or in-office medications, that spending sits outside the $2,100 limit, and your full annual drug exposure includes both categories. Before the final checklist, one more thing for a specific group watching this. If your income is roughly under $22,000 as a single person or $30,000 as a couple, there's a Social Security Administration program most people in this range have never applied for, Extra Help. It's a federal program covering Part D premiums, deductibles, and most copays for qualifying seniors. Approved recipients often pay somewhere between $0 and a few dollars per prescription, regardless of whether they've hit the $2,100 cap. Many eligible seniors never apply because they assume the income limits are lower than they actually are, or they've simply never heard the program's name. If your income is anywhere near those numbers, make one call this week, 1-800-772-1213, and ask specifically about extra help for Medicare prescription drug costs. You can also apply online at ssa.gov. June is a good time to apply. Approval can take effect within a few months, cutting your costs for the rest of 2026 and setting you up well for 2027. If you're unsure whether you qualify, call anyway. SSA can tell you within minutes. No cost to apply, no obligation, no downside. The only real cost is not knowing. The 3-number checklist. Let's bring this together simply. Everything today, the real COLA number, the SSA 44 form, the senior deduction, the Part D cap, comes down to 3 numbers you should check before this weekend's. Number 1, your January 2026 deposit minus your December 2025 deposit. That's your real net COLA. If it's much smaller than expected and you're paying IRMAA based on 2024 income, that no longer applies. Download Form SSA 44 from ssa.gov this week. Fill it out with your retirement date and current income documentation, and submit it to your local Social Security office. The reduction starts within 60 to 90 days. Every month you wait is overpayment you can't recover. Number 2, your 2025 federal tax return. Pull it up today and look for the $6,000 senior deduction, single, 65 plus, or $12,000, married, both 65 plus. There, you got the benefit. Not there. Call your preparer this week and ask the specific question. If it was missed, file Form 1040-X. The refund is waiting, but it won't come to you on its own. Number 3, your year-to-date Part D spending. Call your plan today using the number on your insurance card and ask for your out-of-pocket total toward the $2,100 cap. Already crossed it. Every covered prescription for the rest of 2026 should cost nothing. Confirm it at your next pharmacy visit. Not there yet? Mark October 15th on your calendar, the start of Medicare open enrollment, so you can compare 2027 plans based on your specific medications at medicare.gov. 3 numbers, 30 minutes. That's everything you need to know exactly where you stand and what to do about it. Here's what matters most. Every one of these 3 changes requires action from you. The COLA landed automatically, but recovering the IRMAA gap requires filing the SSA 44. The senior deduction exists, but only helps you if it was actually applied to your return. The drug cap protects you automatically, but only once you know you've crossed it. None of these programs send you a notification. None of them call you. None of them flag your account. The system waits, and the people who capture these benefits aren't the ones with the most complicated finances. They're the ones who knew which 3 numbers to check, and checked them before the window closed. You made it through this whole video. You already know more than most seniors do right now. Take the next step this week. Subscribe and turn on notifications if you haven't already. Social Security, Medicare, and senior tax rules shift constantly, and this channel covers every one of them in plain language before the deadline passes. The next update could be the most valuable one yet for your situation, and you'll want to be here when it happens. Before you go, share this with one person in your life who's on Social Security or Medicare. A parent, a sibling, a neighbor, someone from your community. One share from you could put real money back in someone's pocket this year. Money that's already theirs, just uncaptured because nobody pointed them to it. I'll see you in the next one.